JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 15th of September 2020. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now, jumping into the charts. Now the first one I want to touch on here is Nikkei 225. I spoke about this one yesterday and I was telling you guys that in a way there is a chance for this one to move higher, especially given the fact that yesterday we had a push and a test of this current highest point of September near the 23,580 zone, roughly around there. And as you can see today, the index kind of drifted a little bit lower but remained above this previous level that I've mentioned before, this 23,339 zone, which is the highest point of August, and or should I say, sorry, the high of the 14th of August. There we go. But throughout the whole August, neither of the daily candles was able to close above this, so that's why we'll keep an eye on this area. You can see that today this area did provide some support, and the index is now stuck in between these two levels, roughly between the 23,339 zone on the downside and the 23,580 zone on the upside. So we're waiting for that pop above this area, above this level, above this 23,580 zone, in order to get us a little bit more comfortable with higher levels. So keep your eyes on that one. Shanghai Composite here is trying to recover. It is slightly in the positive territory, unlike Nikkei, but as you can see, it still is struggling with this barrier right here, the 3,289 territory right here, or in a way we could round it up towards the 3,290 zone. So you can see that the index is still struggling with that. So if we get a nice push above it, yes, it could increase the chances for this one to move higher. However, we do have the 21-day EMA, which could act as a good area of resistance. As you can see, it did so back here on the 7th of September, and we saw that happening previously here in history. So that's why I ideally preferably push back above the 3,336 zone here. Could do the trick for more buyers, so keep your eyes on that one. But if it continues to struggle to overcome this 3,280 and 3,290 zone, and then drop below, somewhere below this 3,239 zone, then, well, I mean, we could consider maybe a move lower towards the lower side of this this current range. Now, the German DAX, I talked about this one yesterday as well, and I was saying that in a way, if this barrier here struggles, if the index struggles with this barrier, then yes, we could see a bit of a correction here. So to be honest, not much has changed, so the same analysis remains as I mentioned to you yesterday. In a way, there is a possibility to see maybe this one correcting a little bit lower, to maybe back towards this 21-day EMA, or at least maybe towards this, not at least, but or to this upside support line taken from the low of the 15th of June, and in a way, if it provides, all this area provides support again, we could see something like this, where the index could reverse and push higher. If you're more on the cautious side, wait for a daily close above this 3,314 zone, roughly around here, which is the highest point of July, and then aim for some higher levels. At the moment, like I said, it's struggling with that barrier. Let's have a look at what's happening on the cash index, to be honest. And yes, the price is currently sitting at around 13,205 zone. So basically, just slightly above yesterday's close, but still below this highlighted area right here. So we're waiting for a break above that in order to get a little bit more comfortable, or if we see the index sliding, then we need to see a nice rejection here, either through from the 21-day EMA or this upside support line. Now gold is very interesting, but at the same time is very tricky, because on one hand, yes, we do have gold, a commodity, precious metal, which is still climbing higher, or at least trying to climb higher, while trading above this upside support line taken from the low of the 20th of March. However, on the other hand, we do have this little short-term downside resistance line taken from the high of the 18th of August, which in a way could well, is currently actually providing resistance. So if this gets broken, then yes, of course, higher levels could be met. The commodity could travel further north towards this 1992 zone or this 2015 level that I spoke about previously. But again, we're not really going to do anything here. We're waiting for that confirmation break through one of these lines, either through the upside support line or through this downside resistance line. So keep your eyes on that one. Now jumping into silver, and silver is overall, of course, it's still trading above this upside support line taken from below the 18th of March. On the other hand, it's, as you can see, it's moving nicely away to the upside from its 21-day EMA. However, it's currently getting a hold of near this the high of last week, if I'm not mistaken. Yes, that's the high of last week, near the 27.49 zone, and at the moment it's struggling to overcome that, but once it does, then yes, higher levels could be met. Of course, ideally we would need to see a nice daily close above this area, and then we could get a little bit more excited about higher areas. Until then, be very careful here. Like I said, it's, as you can see, it's finding good resistance near this barrier, so we need a confirmation break here above this area first before examining higher levels. Jumping into another index, and this one is a dollar index here. So basically the DXY here, as you can see, it's sliding lower, it's sliding back below its 21-day EMA, which of course is kind of making the bulls worry a little bit. So this idea here is not really working out, where I was initially saying that there could be a possibility of seeing maybe a larger correction to the upside. However, again, well, these things happen. So at the moment, basically the DXY is kind of moving sideways. So for now, probably we're gonna take a bit of a neutral stand and wait either for a push above this 93.81 zone in order to aim for a possible larger correction to the upside, or we'll wait for at least a drop somewhere below the 92.24 zone here, and then we could consider lower areas. Until then, we're just gonna, like I said, stay neutral. Now jumping into Litecoin, and Litecoin here is well, it seems like it's forming a possible bearish flag here. So we have our pole, and now we are still seeing a bit of consolidation here. However, it's struggling to overcome this 51.42 territory marked, as you can see, marked by the lows of the 2nd of August, the 12th of August, and also then marked near the highs of the 5th of September and 12th of September. So, and this level also coincides with the 200-day EMA, and as we can see, the crypto is sitting below all of its EMAs. So in a way, it's struggling to overcome this barrier, and this is kind of making us worry here a little bit that this could be a possible bearish flag here. However, before we could take that idea into account, we would need to see a break, first of all, a break of this little short-term upside support line, and maybe then a drop below the 47.13 zone. But if you're a little bit more on the cautious side, wait for a drop below the current lowest point of September near the 44.88 zone. This way, a drop below this level would confirm a forthcoming lower low, and the next target here could be somewhere around the 39.16 level marked by the lowest point of June. Now, if this, of course, gets pushed above all of these EMAs, above this 51.42 zone, then maybe, just maybe, we could see this one climbing a little bit higher and making its way further north. But again, for now, it is where it is. So let's continue observing and waiting for that confirmation break. AUDNZD. So last week and yesterday I spoke about this pair because it's quite an interesting one, and as you can see, it continues to balance above this upside support line taken from the low of the 18th of March. So in a way, as long as this upside line stays intact, we will continue aiming higher overall, of course. But to be a little bit more on the safe side, and let me just remove this highlighted area because that's not the level that I'm going to be keeping an eye on. It will be this level right here now. So this highlighted area here near the 1.0920 22, 21, roughly around here, and if we do get a nice push above that, and then if we do see the daily candle remaining comfortably above this area, then yes, higher levels could be met. So this is me being just on the safe side. But if this upside line gets broken and the rate falls below the current lowest point of September near the 1.0880 zone here, then yes, sorry, not 1.0816 zone here, then yes, lower levels could be met, guys. So let me just remove this a level here from just to get it out of the way. And yep, like I said, that's what we're going to be looking at for now. USDJPY, and this, I haven't looked at this one for quite a while now, but the most important thing is that it's still, first of all, trading below this downside resistance line taken from the high of the 24th of March. And from the shorter term perspective, it's kind of moving sideways a little bit here, maybe with a slight tilt to the downside. However, to get, let's say, excited about lower areas here, we would need to see at least a drop below the 105.30 zone first, and then we could consider the downside. But at the moment, you can see that yes, the pair is moving that way, but will it actually break it? We'll just have to wait here, guys, because at the moment, like I said, it is very tricky. It's really, I would say, difficult right now to see which level it actually works the best. But at the moment, let me just clear up some of these lines because no longer these are valid. But what you could do here at the moment is, once again, keep your eyes on the 21-day EMA here. Now, again, don't get me wrong, because we're moving sideways here, that EMA is a little bit on the kind of it's getting put away a little bit because the rate keeps oscillating around it. So that's why for now, basically, we're going to look at this as from a bigger picture, and in a way to get a little bit more excited about higher areas. Then we would need to see a nice good break of this downside line here taken from the high of the 24th of March, and then a push above this 107.05 level in order to get excited about higher areas. But until then, all this area right here, even if we see a nice strong move higher, could still be seen as a temporary correction before another leg of selling. But if you're more on the cautious side, as I said, wait for a drop below the 105.30 zone. GBPCHF, so this one is well, let me recapitulate. Let me put it this way. Last week I talked about this one, and the week before that I was talking about this one, but I was saying that there is a chance for this pair to move higher, especially if it remains above this 1.2037 zone. It did not, it started drifting lower. And what I was saying then, that if this short-term upside support line taken from below the 29th of June gets broken, then we could see lower levels, especially if the rate falls also below this 1.1892 territory. As you can see, it did have a strong fall and it continued moving lower. Initially my target was only around here near this 1.1754 zone, but as you can see, it continued to slide and continues to slide all the way towards this lowest point of June near the 1.1631 territory. And yep, now we can see that it got a kind of a, let's put it, somewhat of a hold up here, from which it rebounded. However, the downside, it remains on the table, especially if it moves again below this 1.1631 zone, which is, like I said, the lowest point of June. And if it does that, then of course the next little target here to consider, and let me just adjust this because it's becoming difficult to find a good level. Now probably this one will be it. So this 1.1545 zone could be that little obstacle to keep in mind, but if it continues to slide, of course, one of the better levels for us is this 1.1247, or this lowest point of March near the 1.1117 mark. So again, keep your eyes on this one, but first keep your eyes on the lowest point of June near the 1.1631 zone. So let's see if we can get another drop below it again. So in terms of the upside, now let me just clear up here this chart a little bit. And first of all, let's get rid of this downside line, no longer valid, and this upside line as well, because basically it's just going to be a little bit in the way. What we're going to do now is, like I said, keep our eyes on some of these levels. Now, with the upside here, now what I'm going to look at here is this 1.1857 territory marked by the low of the 17th of August. And if we get a drop below that, and by the way, that's actually the, if I'm not mistaken, that's the lowest point of August, is that, if that's correct? Yes, that is the lowest point of August. So this 1.1857 could be a nice little obstacle to keep an eye on, and if we get a rate rise back above it, then maybe, yep, we could consider some higher levels here, or at least a move back towards this 200-day EMA on the daily chart. So again, keep your eyes on this. But for now, it's still a little more on the bearish side. It might drift a little bit higher here, test this 1.1754 territory, and then drift back down. So something like this could be possible, but nevertheless, still the same idea remains. A drop below the 1.1631 zone could do the trick for more sellers. Now, jumping into euro against the Turkish lira. Here, this one I've touched on a week ago or 2 weeks ago. I'm trying to remember now. But what I was saying, that if this barrier here, the 8.8226, gets broken, then, well, this could open the door towards that psychological 9 mark. And as you can see, this is exactly where this pair is shifting right now. I mean, we're just only just a few, I would say, pips away from hitting that historic high, and well, I mean, that's really not looking good here for this pair, for the Turkish lira in general. So for now, basically, we'll continue targeting the upside. We'll continue targeting that psychological 9 zone, and we'll see if that one can provide some resistance. If it cannot, then, well, I mean, it looks like it looks doom and gloom here for the Turkish lira against the euro, against the yep, again, its European counterpart. Now, finally jumping into euro against its US counterpart, and we can see that this is the result of a weakening dollar here that we're having. The pair is shifting higher. I talked about this one, I talk about euro dollar in every video of mine, and as you can see, the pair continues to trade above this upside support line taken from the low of the 14th of May, so that's still positive for it's still positive in general. But what I was saying yesterday, that be very careful here right now, because again, yes, we are aiming for the 1.1965 level, but if that gets broken, then of course the next target is that psychological 120 zone. But again, like I said, be very careful, because we, at the moment, it seems like the pair could be ranging, and in a way, if it travels higher but fails, let's say, to break above the 1.1965 territory, somewhere around here, then we could see a bit of a decline back down here, a move back down, and maybe this upside line could get broken, and we could see maybe a test of this 1.1753 territory somewhere around here. But as I mentioned to you before, if that gets broken, now this is from where we could consider the downside, because we don't want to rush into anything here, because if it breaks, for example, this upside line, it might drift lower, test this area, maybe even overshoot it, but don't keep the daily candle below it, and then reverse and push higher. In that case, we would be getting ourselves a nice range here. But again, at the moment, it's too early to talk about that. First of all, we're examining the upside here for now. Yes, we are aiming for higher levels. We're going to be aiming for initially, like I said, for this 1.1965 zone, and then we will take it from there, guys. We'll see how it's gonna play out, but for now, it is how it is. We'd rather be safe than sorry. So guys, I can see here in the chat room that many thanks. Yep, future, yeah. Thank you very much for that. Yeah, I hope you enjoyed it, and in general, I hope everybody else enjoyed it. So really appreciate your time, guys. If you want to catch my video later on, as always, 13:15 GMT time. For now, guys, I hope you have a wonderful, wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.